Hi Team AAA, it's Melissa Ashcroft here, the owner of the AAA Financial Group and host of the Property, Ownership, Wealth and Everything Related, also known as the P.O.W.E.R podcast, where we chat about everything money, taking charge of your power, and we talk to special guests about how they arrive to where they are in their careers and their specific insights about what they do and how they assist people take control of their future. Be sure to follow our socials at AAA Financial Group on Instagram, TikTok, YouTube, and visit our website at www.aamortgageswithAt.com.au to read more about us and book in an appointment. I'm excited to have our first return guest today, Dale Walsh. You may remember him from our second podcast. He is a member of the AAA team and he has just accelerated his career and is now an accredited broker. Today we're going to talk all things Dale, why broking, and what niches and specialties that Dale is going to be known for. Welcome, Dale.
Thank you for having me back.
Thank you for coming.
Each day.
Each and every day, yes. Monday to Sunday.
Monday to Sunday.
Well, I'm so proud of you. I'm pleased that you've taken this extra step in your career. So congrats on a publicly notified basis. So it's great to have that. So it's been a while since our podcast listeners have heard from you. So yes. What's new in your world?
What's new in my world? So obviously we've been through our journey together.
Yes.
You've showed me the ropes and together we've had lots of highs, thankfully not so many lows.
Yes.
And we've been through the accreditations, we've done all the bits and pieces that go with becoming accredited. So today we are here to obviously discuss the process and how long it took, and it takes a while. So thank you. Thank you. I know.
No, well, congrats.
And it's very exciting. So looking forward to continue to work with you and the team here. It's good fun, and we do what we do best, helping customers.
That's great. And we got that recorded, so we can hold you to that, So now we know you like it here and you're having a good time. That's good to know. Sucker. So look, tell me what's one, because you've been a broker now for about a couple of months.
Yep.
Officially.
Yep.
So what's one thing that you've learnt that's a standout thing that was different to what you thought it was going to be?
I think the biggest thing for me is really understanding the amount of lenders that are out there, and really understanding that there is something for almost everybody. Assuming there's, a pulse, there's some income on the table, there's some sort of deposit or equity.
Yeah.
I think, it's whether the client's willing to pay for it.
Yeah.
That they're actually going to be approved somewhere.
Yeah.
I think the amount of solutions that we can provide as brokers is something that's really awesome and really powerful. If you walk into a bank, for example, you're kind of pigeonholed to just one policy or one banker that may not have the experience to be able to dive outside of just their particular bank, especially if they've come up the ropes in that one bank. They haven't, moved across major to major like a lot of people do.
Yeah.
I think having all of the tools on the belt is super important, and it gives us the ability to connect with more people and help more people, and that's ultimately why we do what we do.
Very good. And I think that's important that you've said that, because I think a lot of people who may have their own home or may have an investment property and they've been with a bank for 5, 10, 25 years, they don't know that there are non-bank options available. There's tier 2 banks, not just the ones we hear from on the news. There's credit funds, there's a range of international banks that are in our market. So, I really enjoy that insight.
If I think back to when I was in a bank and when I first started home lending, it was 8 years ago now, but there was clients that came in to me, and this was before some of the home buyer schemes and some of the incentives that the governments have put on the table. But I remember saying to people, look, I'm sorry, but you're not there yet, or this is what you need to do to achieve this goal that you've got. And, I stepped out of major bank and went to non-bank, so I learned a bit more then. But ultimately, knowing what I know now or in the last couple of years, I didn't have to turn those people away. I just had to point them towards another door.
Yes.
And that's the difference of, the knowledge of a broker versus of a banker.
100%.
Is the options out there.
And now you're all the doors.
All the doors.
So let's talk trends in the marketplace. If someone's looking for an owner-occupied home or to buy an investment property, what are you seeing in lending at the moment?
I think we're seeing some fairly sharp pricing. It's almost like a pricing war amongst the banks. I think it's getting a bit trickier to move people from bank to bank.
And why is that?
Because the banks are pricing a little bit more aggressively.
Okay.
I think they want to keep the clients. I think
Yeah.
they're putting better offers on the table. Not everyone's ready to move yet. I mean, rates have started coming down, but rates aren't as low as what they were some years back. So those people that got the bigger loans still may be somewhat mortgage prisoners to some degree. And whilst there is options for easy refinancing and the ability to get out,
Yeah.
not everyone's taken up on that offer. Or circumstances have changed. They might have welcomed a little one to the family. They might have, bought a new car with some debt attached to it. They might have gone and put something on a credit card. It might be a holiday or a wedding.
Yeah.
In either way, circumstances have changed. It hasn't allowed them to be able to up and out, so to speak.
Yeah.
So it does prevent them from being able to move as easily as they potentially once could.
So the trend we're seeing is banks and non-banks are being very competitive with pricing because they want to retain customers.
I feel like we're seeing it.
Okay,
Yeah, when I
that's
speak to,
interesting.
our existing book, I think, even we had one just yesterday where I think it was ING, if we can mention names, but
Yeah.
they came in at 5.44.
Yeah.
Now, to try and beat that at a 70% LVR with another bank, unless you're looking at a fixed rate loan, which is just not something we're telling anyone to do at the moment,
Yes.
it's hard to justify the costs
The
for
cost.
moving, number one.
Yeah.
Unless there's another need where, it's servicing, they can buy another property with another bank, or they've got a cash out requirement
Yeah.
and they can't get it with their existing bank at the same rate.
That's right.
It's, it's
I
trickier.
understand. So just leading on from that, what do you think are the biggest trends in the next 6 to 12 months? And ignore the fact that we're all thinking there's probably going to be 2 rate reductions.
Yeah.
Do you think the banks will continue to be as competitive, or maybe they'll offer different things?
I don't think we'll see them offering different things. I think we've seen some of the major banks, which is good, coming to market with some more flexibility for the self-employed type customers.
Yeah.
That may create some movement, and that, will form a bit of a trend. I think once one major bank starts to do something, we tend to see the second one go through, and
Follow
the third and the
suit.
fourth, and then
Yeah.
some of the smaller sort of lenders will play as well.
Yeah.
I think pricing will remain sharp. I think the cost of funds may ease a little bit, meaning banks can be more aggressive. And I think, that trend will continue because no one wants to lose customers.
Yeah.
I think competition is a lot more than what it ever used to be. I think brokers have done a really good job at creating so much competition amongst the marketplace. And, if you think back to Westpac or CBA, who typically had really big books,
Yeah.
they had all the banks accounts, they
Yeah.
had the business banking, they had the credit cards. Yes, there's credit institutions and credit unions, so to speak, where, the smaller type customers might have gone as a loyalty type play or a location type play, if you think of Newcastle Permanent, people in Newcastle, and so on. But I think now brokers have created so much more competition
Yeah.
that banks are forced to kind of play a bit nicer.
Yeah.
I still don't believe there's such thing as bank loyalty. I think the banks draw the line at some point in time and go, you know what, we're not going to price that.
Yeah,
Where
I
that
agree.
sweet spot is or what that fine line is, who knows? It's a mug's game.
Yeah.
But I do think as an all in all, they're starting to be a little bit more aggressive with the retention side of things.
Okay, I think they're really good points, and that leans into the statistic about 74.8 of all mortgages are introduced by brokers.
Yep.
So really the banks who used to kind of not really understand what we call third party or broker relationships have now completely flipped. Like when AAA started in 1988, I don't think the market share was over 10. And then slowly over the past, 35, 36 years in business, we've seen it gradually increase. But to see it, at this 75% level, that's 3/4 of all mortgages. So yeah, exactly what you're saying is the trend. And I think it's going to keep going up. I think the fact in the UK is it's like 95% of loans. So,
Yeah.
We're heading to a more global model there. So I totally echo what you're saying. And
I think just to jump
Yeah.
in as well, if we move away from the trend of, the typical owner-occupied investor housing type market, I think a trend where we'll see stronger and stronger, much like the home lending space, is the commercial side of things in the broker world. That trend will sort of grow, maybe not as quickly as the home lending because the market share just isn't as strong, but I think more brokers are being utilised now for commercial loans than ever before.
Absolutely.
And I think, aggregators or our governing body, so to speak, are doing more to encourage brokers to be educated and be across commercial lending, not so much the home lending side of things. So I think we'll see that trend continue to happen, where brokers are growing and
Yeah.
writing more of that business.
Yeah, well, look, I started the wrong way around, right? So I started all in commercial and never did a home loan. But I do see that shift, and we'll talk a bit more about SMSF loans, which is one of your specialties. But that's also quite prevalent for business owners or self-employed people that may have a premise like a factory or a warehouse or a shop that they're operating out of. There's now that ability for business owners to purchase those properties using their SMSF. But we'll go to that in a little bit. I want you to tell me, and maybe this is part of that, but tell me a scenario where you've had to use it really has tested your thinking or your creativity in order to get the deal across the line.
Yep. I think we see it every day.
There's been many.
There's been a lot. But that's what we enjoy, what we do. I mean, if I walked in every day and went, yep, that's going to go there, 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 it becomes mundane and it becomes boring. I think the curly ones, which is what brokers typically or historically used to see more of. Now we see the vanilla stuff a bit more as well. But I think the curly ones are where we can really make a difference and really show someone how valuable we can be to them as a consumer. Sure. I think... If I think back, I've always said the combination of bank and non-bank can be really powerful. If a client's got a property and they want to buy their next property, whether they've got kids and want to look at wealth creation or they want to cash out for, money in the markets, be it shares, crypto.
Tell me what that scenario was.
So,
tell me, without using names, but give me the overall story.
We had a client who had a property down in the ACT. This particular client already had 3 properties. Now, she was in a position where she had signed a contract and paid a deposit a couple of years back on a off-the-plan apartment in, again, the ACT. Now, this would have made it her 4th property. Really, really good for a woman to, have 4 properties or 4 on the way. Although her position... Anyone, yeah. But getting to the point where a woman on her own with a child, I think as someone who grew up with a single mother, it's really, really great to see someone on her own with a small kid they've got to look after doing such big accomplishments. But she was in a position where she had to settle on this property or she risked losing her money. No one wants that, right? You don't put money into an investment to go backwards.
No, very stressful.
Yeah, no doubt. But, we managed to get her a better rate on the primary portion of her debt through a major bank.
Okay.
And then we looked at a non-bank for the new purchase. Now, we geared up the existing properties up to 80% at a rate of, I can't tell you what it was off the top of my head, but sub 6. And we managed to take it to a non-bank at 40 or 50% LVR, loan to value ratio. So the pricing was still fairly sharp. I think it was 6.3, 6.4 for an investment property.
Wow.
So if we looked at the blended rate, I think she was still sub 6 because it was, so strong. Now, what that meant is she's going to settle on the property in the ACT next week or the week after. She refinanced out of a major bank, still into a major bank for the primary part of her debt. We saved her some money there. Ultimately, I think that's a really big win because, she spoke to another broker who said, I can't help you. But the benefit of leveraging policies across bank and non-bank in this particular situation managed to really win.
Yeah, well done. So earlier I mentioned that, SMSF is something that can really assist business owners, but also investors with the, current way it's set up and the tax benefits of that currently. And I've noticed that that's something that you're really leaning towards. So tell me something about SMSF that not everyone might not know, not particularly related to a scenario, but, what you think about it and why you specialise in it.
I think... Number one, I specialise in it because prior to coming to AAA, my background was around supporting brokers and educating them and helping them with self-managed super fund transactions. So,
I didn't know that.
Didn't you?
Yeah. Keep going. I learn something new about Dale Walsh every day, everybody.
There you go. So do I, actually. So, look, I think they're a really powerful tool. I think the way that the banks look at the transaction is very much pigeonholed to the fund. Yes, there are now banks that look at servicing outside of what the super fund brings in. But if you go the other way, if I've got a self-managed super fund and I'm going for a home loan with husband or wife and ultimately the super fund is there, I don't have to disclose the expenses of that super fund to the serviceability of the bank.
So you might have a $2 million SMSF loan over there.
Yep.
But you want to get a home loan over here.
Yep.
And the bank doesn't see that loan. So they're not going to dock it as part of how you will service the loan.
Correct.
Okay.
It's sitting in its own entity.
Yeah.
So yes, you'd need the letter from an accountant supporting that it's trading profitably and so on.
Yes.
But ultimately it would be excluded
separate
from the assessment. And if you go back the other way, when you're going for an SMSF or a self-managed super fund or an LRBA, the monthly expenses that you've got, in your personal name, so private schooling, private health, that genuinely make a difference to your loan, they don't impact the self-managed super fund. You could have 100 grand worth of credit card limits, which is going to shoot anyone in the foot when it comes to borrowing power.
Yeah.
It doesn't make a difference to the self-managed super fund.
Yeah.
All of those sorts of things. And I think, if property keeps going the way it has done in Australia, typically speaking, a lot of people in Australia have done very, very well off the back of property. Now, the ability to be able to take control of where your money is and not necessarily have it overseas or, supporting tobacco and, what other trade happens behind the scenes that we don't know about. Your money generally goes into a balanced fund, and no advice here, general advice, not factual. Your money goes into a balanced fund depending on your life cycle or your age.
Yeah.
Now, you've really got no control or no idea where that money really, really goes.
Yeah.
If you ask me where my super is right now, I'd tell you it's at Mercer, and that's as far as I know.
It's up to date.
Yeah, thanks. I did check that.
Phew. Okay, yeah, I understand.
So that then gives you the flexibility and the control to be able to, go and invest in property.
Yeah.
It may not necessarily be property.
Yeah.
It may be that you go and invest in a piece of art because, we've seen some of the stuff you can put to paper. It's amazing. It might be one of Monique's model shots. You never know. But it's not just limited to property. But obviously that's, where our focus is, and that's where we come into play if there's a debt on it. I think it's also a protected asset.
Yes.
So if, something happens outside of super, marital split, business goes down, unfortunately, and you can't revive it, you might go into administration, be it voluntary, involuntary, and so on. The asset in the super fund is generally protected.
Yeah.
Yes, there's personal guarantees and stuff like that, but it's a few more steps away, which, is good from an asset protection. And if you look at someone who's self-employed, it can also be a really good vehicle to help with building their portfolio.
Yeah.
For example, you have a commercial property in the city, you've got to pay rent on this commercial property. If you were to potentially own this inside of your super fund, you would be paying the rent into your own super fund at market value, unfortunately. Maybe a slight inflation, but I won't tell if you don't. And, it's then money going into your back pocket to benefit you in 5 years. Joke. 25 years. As opposed to, going 12 months down the road. Yep.
So instead of paying rent,
Yep.
you might consider purchasing where you're working.
Yep.
Or where your business operates.
Where your business operates.
Or
Yep.
another business operates.
Yep.
But you couldn't, basically, instead of paying rent, you're paying down the loan on an asset that you'll ultimately end up owning, even if you sell the business or whatever, or when you retire.
Yep.
Yeah, I think people really do need to understand it. And I think really the thing that you've spot on, hit the nail on the head, is one doesn't need to affect the other. This one doesn't affect that one, which is great to know. Secondly, it's a great tool for income. But the thing that people also don't know is that no banks do SMSF loans. So you really don't know, if you're used to your ANZ and that's who you, unless you're an ultra high net worth, they don't do those type of loans, and banks don't do them at all. So it's really, I think you've chosen a really smart, but like a really niche space. And I know you know all about it and inside and outside the fund. So I encourage anybody that hears Dale and just wants to sound out a conversation, or they have some scenarios in mind, to make contact, because we're always here for a chat. We're experts in credit advice, and it's not my lane. This is Dale's lane. And so, it's really interesting. I obviously need to learn more about Dale and his past, employment history.
Resume was a lie.
I should have really read that. Go from there. So look, thank you for that. when we get to this point of the podcast, I ask some fire questions.
Okay.
So what I'd like you to do is just say the first thing work-related.
Dangerous.
that comes to your head. So I've tried to make these like work-related.
Okay.
Just because I know Dale and I have a very dry and black sense of humour. So what is the most underrated skill in your toolkit right now?
I think it's the ability to connect with people and be genuine, and not try and sell something that we're not here to sell.
Yeah.
I think we're here to help.
Yeah.
If we can't help, we tell you.
Yeah.
If we don't want to help, we tell you.
Yeah.
Not everybody's for us, and we're not for everybody.
Biggest myth you see in finance or in investment?
Banks will look after you.
What's the one decision you'd tell your younger self to rethink?
Everything, but don't sell.
Never sell an asset.
Never sell an asset.
I know. I
Yep.
think both of us and everyone in our office has had that. Oh, if only I could have held on to that. It'd be worth that now.
Yep.
If you had 10 million bucks to invest right now,
Yep.
where would it go and why?
10% to my holiday fund and 90% to probably a decrepit property 400 metres from a train station, and I would develop it.
So you'd
and
invest it. You wouldn't
Yep.
quit your job and go holidaying for 2 years.
I can't say that on this, can I?
No,
behind
I
you-
did say work related, but I think you'd take a big holiday first.
I would invest it in the
Okay.
market and I'd turn it into 20 million.
Okay, and what does power mean to you, or what is like a power quote that you live by? I threw this one at you. It wasn't on the show notes.
I think team. Together everyone achieves more. And we do.
I see what you did there.
Oh.
TEAM. Well,
Yeah.
well done.
Thank you.
Thank you for your time and expertise.
Thanks for having me.
And hopefully we can have you back for a third time. Our first returning guest.
Let's hope.
Let's hope.
Thank you,
Thanks
Melissa.
everybody for listening.
Bye,
Ciao.
everyone.